please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, something's on with the power stocks. All of a sudden, you've seen a big move in NTPC and Power Grid. Let's just pull out the intraday chart of both these names. Power Grid is up 3.5%. Not just that, NTPC as well has moved to high point of the day. PTC, Power Trading Corporation, of course, not strictly in same space, but related to power, and that stock as well right now as we speak has moved to high points. So a lot of these stocks are seeing quite a bit of intraday surge right now. That's PTC up 4.5%. Good time to get you the BTST calls. Buy today, sell tomorrow. Ashwini and Mitesh back with us. Ashwini, you go first. Word on the index, just moving on, and of course, stock calls.
Well, on the index, people who want to carry can still carry positions on the long side because Bank Nifty has received fresh momentum from PSU banks. As far as individual stocks are concerned, Power Grid is a buy with a stop of 217, target of 232. Syntex is a buy with a stop of 35, target of 42. And Ultratech Cement is a buy with a stop of 4,000, target of 41.50.
Okay, quite a few buy ideas coming in over there. Mitesh, your ideas, BTST or STBT?
I still have both BTSTs. One of them is ONGC, that's a buy with a stop at 166.5 for targets of 175, most likely if not by tomorrow then day after. And Dish TV is something which now appears to be gaining strength, so I would be a buyer there, take a BTST position with a stop below 81.80 and look for an 85 kind of a target for tomorrow.
Okay. Ms. Dulcin, fundamental thoughts on the way some of these power stocks have moved up today, Power Grid, NTPC?
See, Anuj, first if you take on NTPC numbers which came on the weekend, I think the numbers seem to be more or less on the better note or maybe on the better footing, so that could be the reason. But coming specifically on Power Grid and PTC India, because this on both the stocks, these things, the trigger is that the kind of investments which we have been seeing in T&D space, the losses are seen to be quite, will reduce to a great extent. Now coming on, first if I take on Power Trading Corporation, power charges having reduced now in the power trading or maybe in the free market, the power are seen traded at 3 rupees to 3 rupees 50 paise per unit, and power trading is the only power exchange having, with the lower prices available now, their working capital easing will happen while their commission or their margin will remain seem to be intact, because the major fund of the company of PTC India is invested into the working capital. If you see their fixed assets, they are less than 100 crores. So I think the margin expansion because of the higher offtake and low working capital pressure will be seen positive for PTC India. Coming on Power Grid, the kind of capex which we are seeing and the 50% market share in the T&D space is likely to continue for next maybe couple of years, which will be seen quite positive for Power Grid going forward. The only worry for Power Grid, I keep my reservation, is because of the huge debt. Probably this is the only PSU where the debt may be having to the extent of closer to about 1 lakh crore or maybe 90,000 crore. Though the company is enjoying, and because of that the company is enjoying very high EBITDA margin of 80-85%. So the only concern could be that high debt, but again the kind of market share which they enjoy in the T&D space of more than 50% can very well be taken care of because of the huge capex having incurred by the company and resulting into high debt. So yes, keeping positive view on both, but more positive on PTC India going forward.
Okay, all right, Mr. Tulsi, and we'll leave it on that note then for this afternoon. Thank you so much for joining in on the show today and giving us your view on all of those stocks and all the earnings. Well, of course, the biggest headline today has come in from State Bank of India. In a historic move, SBI has cut the savings rate by 0.5% to 3.5%. This is for all the bank accounts, the savings bank accounts, where the deposit amount is less than 1 crore. So it will impact a large number of depositors with SBI. The bank says that huge outflows from savings accounts post demonetization put pressure on the cost of funds. Here's a word coming in from the management.
So real interest rate being so high, there was no choice for the bank but to bring down the savings bank interest rate. We have been cutting the term deposit rates, but we were watching for a right time. And the other consideration was that when MCLR we brought down by 90 basis points, we had a lot of inflow of funds during the demonetization in savings account. So either the choice before the bank was either to raise the MCLR or reduce the savings bank interest rate. So that's why we thought that real interest rate being so high, so there is a case for bringing down the savings bank interest rate. Savings bank interest rate has been static since 2011. At that time it used to be 3.5% and now it is 4%. It was like in a post-merger scenario approximately 9 lakh crore.
Okay, that was State Bank of India. But let's get an insight into dealing room chatter then. Naveen Shetty is here with Trader Talk. Naveen?
So Anuj, if you see the volumes, they have been relatively on the subdued part. So what dealers believe is this is because the FII participation has been fairly on the lower side. Meanwhile, on the other hand, the DI activity on a relative basis, they have been on a better foot as opposed the expiry period. Also, if you see the trading activity, that has been mainly stock specific. So banks, metals and IT. If you see SBI in the banking pack, that has been a clear leader. On the other hand, what they believe is going ahead, the trade is going to be more or less range bound as the index is at a higher level. And the key triggers that the dealers are keenly watching is the monetary policy day after tomorrow, when they believe that the RBI is expected to cut around 25 basis points. Also, the first half of the earnings, according to dealers, has more or less been stable. Now they'll be watching out for the second half. That goes well, we might see another high in the markets. Back to you.
Okay, all right. Thanks, Naveen, so much for that. And we are at the day's high, 10,070 now, 71 actually, pushing up on the index. Anuj, this just seems to be like the rally of disbelief, right? It just keeps going up, up and up. But then there are always people who are questioning the real sanctity of earnings as well, whether the kind of numbers we've seen so far in the season, whether they match up to this kind of momentum.
They don't, and they don't need to. That's the point you were discussing earlier as well. We've now spent, 3 or 4 quarters discussing this, that where are the earnings? But look, Surabhi, every market is different. This is a different bull market that we're part of right now. It's factoring in something else. Now, it could be wrong, and if when the realization will come, maybe the market does correct. But as of now, this market is banking on something big. We are going through a bit of an early phase of the kind of phase that we went through between 2003 to 2007. And I say that repeatedly because I still remember, when the market at that point was going up, and the earnings were not catching up. Same questions were raised. Of course, now valuations are a lot different compared to 2003, but then we are in different dynamics as well. But once the earnings revival did catch up, I think it just didn't stop. And after that, you saw the big bull market. So I'm not saying that we're set for encore of 2003 to 2007, but this market maybe is factoring in something similar. And once again, the same point. The calls for correction in this market are essentially hopes for correction. And you've missed out on this huge rally, and that's why maybe that calls comes in. But you don't stand against a speeding train. That's as simple as that. And you have to respect the market. The tape is the final word. The tape is telling you that something is on right now. Not just in Indian market, across the world, but most of our Indian market. A lot of bad news are, companies coming out with bad news, they are being bought. Of course, today has not been, today has been slightly different with the likes of V-Guard. But otherwise, I think the earnings season has also shown you that the market is willing to give benefit of doubt. And liquidity is just way too strong right now.
Actually, like, so V-Guard and even in LIC Housing Finance for that matter. I mean, some of these stocks, wherever, I guess numbers have not really met the elevated expectations in the elevated stock prices. There is a bit of, at least in mid-caps, there seems to be that granular approach. I don't know so much about the Nifty 50.
Yeah, and also, the market is finding leadership with strong stocks, time and again. We saw what happened with HDFC Twins and Yes Bank. Again, just to reiterate the point, State Bank of India today, I think you'll be surprised with the kind of delivery number that you'll see in State Bank of India. I'll be interested to see what's happening with the derivative positions of FIIs, because for the last 2 days we have seen selling, and that's the point we discussed in the morning as well, that there was quite a bit of selling in index futures and via index options on Friday, and if those shorts don't get followed through, then the market could see further covering. But really, this is phenomenal right now. Ashwini, so on the Bank Nifty, we are at 25,100 now. What's the next level, because it's now uncharted territory? And also, I wanted your thoughts on the slight distribution that we are seeing in the mid caps. Even as we speak right now, the advanced decline is favoring declines.
Well, I think targets are quite useless because you are at new highs. But for whatever it's worth, probably 25, 250, 300 could be the next target. Now, there is no distribution in mid-cap. What is happening is that initially you had the mid-caps which ran up, and large caps were range-bound while we were hanging around this 9,000, 9,400, then 9,500, 9,700. Now large caps are getting a fresh leg, and what is being priced into the market is this entire macro scenario: the reform, the stable government, the policy decisions that are getting taken. All that is not talked of. I mean, the biggest risk in EMs is political uncertainty. So that is getting priced in, and at some point earnings will come back, because if rates are going to come down, just the interest component will take earnings higher. So you have to keep buying the dips, and there's no point trying to give these valuation arguments, etc. I think Bank Nifty has started a fresh leg now. From here, possibly State Bank could participate a little bit more. So that should take it higher.
Okay, up and away. Quite a few stocks. Count in a Bosch as well with about a 1% up move. HDFC is now beginning to show some momentum. It had a quiet first half, but now it's moving all over again with just about a 0.5% increase. Not too much now, but yeah, it's ticked back up on the positive side of the screen. That's this afternoon. Let's get you some more thoughts on the market action. In an exclusive conversation with CNBC TV 18, Manishi Ray Chaudhary of BNP Paribas says that for this rally to sustain much beyond current levels, we do need to see an on-the-ground earnings revival, and that at BNP Paribas, they do not think that the RBI will be in favor of a rate cut this time.
This hope of earnings revival, combined with a much better policy environment that we are seeing in India, that has contributed to this rally. And on top of that, we are now seeing a deluge of liquidity, both from the foreigners and from the domestic institutional investors. Valuation is indeed it's a valid concern, because many other markets of Asia which have moved up sharply have been accompanied by earnings estimates upgrades as well, which is possibly not the case for India. So for this rally to sustain much beyond the current levels, we would actually need to see an on-the-ground earnings revival. And I think, it would possibly come through by late 2018, maybe the second half of the fourth quarter. We are overweight clearly on the consumption resilience, and this is not just in India, but across the Asian and emerging market universe. We think consumption resilience is likely to be a key theme that is already playing out and will continue to do so. So from that perspective, we are positive on the consumer discretionary side, the auto names in particular, select media companies as well, and a few consumer staples, particularly those which are benefiting from increased product penetration. So that's the first silo within India. The second, or again, it's sort of related to this consumption theme. We still